Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, today we're going to talk about what I'm sort of planning for the current crop of Kaiser favorites, which one to continue, which one to possibly demote to the bottom fish sector, and a little bit about the inflection that I think is still awaiting this market and the bottom fishing strategy that I've now deployed.
How did the Kaiser favorites do in October?
Well, since we talked about that at the end of September, things have not improved. As of October 31st, it's down 17.1%. The three lithium companies, they continue to be the worst performers. And of course, lithium carbonate prices are still stuck at $4.70 a pound, which is less than half the price needed in order to mobilize the supply that the EV sector related a contribution to net zero emissions goals for 2050 by 2030 require. So what in the lithium sector, it's simply saying, well, EVs are dead, lithium's not needed, and the juniors are languishing, and of course the carbonate price is cheap because there is now this imbalance between demand and supply, which of course has nothing to do with the future supply and demand balance, but that's 5-6 years down the road. So no help from the lithium sector for the lithium juniors. Brunswick Exploration Inc. did put out a good news release on October 30th. They mentioned earlier in the year that they had picked up licenses in Greenland, an area where others for some reason have not bothered to look, and they got summer prospecting work done and announced that they had discovered an evolved spodumene-bearing pegmatite field on the Nuuk license, and this will be something that they will look at next year. Greenland's a pretty good mining jurisdiction, but the problem is that the market didn't care. The stock actually went down a bit after this news came out. I'm not sure I will continue. Definitely will not continue Brunswick as a favorite. I still have to decide whether to keep them as a bottom fish rated company, demote them to that list. What I'm not sure about is to what extent there's going to be some sort of consolidation, a rollback coming where Brunswick gets blended in with a bunch of others, and I really don't want to be bottom fishing for companies that have some sort of rollback in the wings. We are seeing consolidation starting to happen in Quebec. On October 15th, Doré Copper Mining Corp., which owns these former copper mines in the Chibougamau district of Quebec, it's doing a friendly merger with ASX-listed Cygnus Metals, which has a number of promising lithium projects in the James Bay region. In terms of which one I'm going to pick for, keep as my representative lithium junior, probably Patriot Battery Metals, because they have done a PEA. They've got a world-class resource. Yes, we know it needs double the lithium price that we have today in order to be worth developing. But if you believe that whatever the outcome of the election is going to be over the next couple of months, that the EV sector will continue to evolve, then a company like Patriot Battery, it will eventually be developed and it'll end up being taken out at a much higher price than the current $340 or so that it's trading at. Now, Arizona Gold and Silver and Canalaska Uranium, they're pretty much even for the year, and they have excellent projects in secure jurisdictions, and they are definitely candidates to be continued for the 2025 favorites collection. Colonial Coal, which was one of my was the best performer earlier in the year, it has retreated in the last while as the market becomes impatient with the story of some sort of buyout by a steel maker, and it's currently sporting a 20% gain. But because the fundamentals have not changed for that company at all, it definitely will be part of my 2025 favorites. PJX Resources is drifting ever lower as the market awaits results from the 16-hole drill program. The way the stock is trading, it suggests that there's definitely no barn burner, discovery confirmation hole. What we hope to get is some sort of batch of news releases and a geological context that shows that, yes, they're starting to figure out how everything works this year. And when they go back in there in May of next year, they will then definitely come up and figure out where the SEDEX horizon is. Given, unless they surprise us and have some super lock on information about what it is that they did or didn't encounter, I will not continue it as a favorite, but I will have it on the bottom fish list. They are more than adequately funded to continue next year. I've got a similar plan for Hercules Metals, which was I put on the list not at the beginning, but later in the year when the stock got hammered, when the final results from last year's drilling disappointed the market. But they put out a press release on October 10th, and from this press release, it is evident that they are still trying to understand the geometries of the Hercules project. The grade has to be higher than 0.6% copper because the system that they discovered is below 300 meters beyond open pitable limits. And with the way things are going now, unless they somehow before the end of the year figure out what it is that's going on, I will probably put them on the bottom fish list because they'll still have plenty of money left. And sometimes it takes a little longer than expected to sort everything out. The stars of the 2024 KRO favorites have been the main gold ones: Solitario Resources Corp, Vista Gold Corp, and West Vault Mining. Now, Solitario is a gold exploration junior. It has no real ounces in the pounds in the ground, but it does have a 30% carried interest in an advanced zinc deposit in Peru that is operated by Nexa. We may hear in November that Nexa plans a serious program next year. I think this asset's probably worth $1 per share. So you're basically getting the Golden Crest play for free. They will have assays before the end of the year for at least some of the remaining holes that are drilled in the western part of the Golden Crest plan of operations. These ones don't have any spiffy gold values at surface, but they do have elevated pathfinder values. So when they drill through the stratigraphy, they may see alteration in that, but they won't be able to tell the gold, whether there's any gold there, until they have the assay. So Solitario could still surprise us, but it is a solid company, well-financed, and if they get their Ponderosa plan of operations approved for next summer drilling, then they're going to be in a very sweet spot to deliver a major discovery. So definitely will continue Solitario Resources Corp as a 2025 favorite. Now, Vista Gold and West Vault, they are ounce in the ground juniors with permitted projects. In the case of West Vault, it's pre-feasibility level of economic study. In the case of Vista Gold, it's a full-blown feasibility study that they have done. Now, I've created discounted cash flow models in my spreadsheet for these two companies, and this allows me to see what happens at gold prices as high as $4,000 an ounce, assuming that there's going to be very modest inflation going forward. And in the case of West Vault, they used $1,800 as a base case price, or $1,790. For their pre-feasibility study, and that came up with a Canadian net present value per share of $3.35 to $4.71 a share. That's 5% to 10% discount rates. And when you apply the rational speculation model to it, at the stage where the project's at, it should be trading at 75% of the indicated NPV. So that would mean the stock should be sort of floating at $250 to $350, waiting for some sort of buyout offer. Now, West Vault has not, since I started talking about this more than a year ago, it has not really attracted a lot of interest in the market because there is this perception, well, Hasbrook's a smallish deposit, will produce 561,000 ounces over an eight-year period. Who will want to develop something that's only churning out 70,000 ounces or so a year? So there's this skepticism out there that some intermediate producer will ever acquire this at a decent premium to the current valuation. So it's actually trading at a deep discount for what it's worth. But during the past week, things seem to have changed. The stock is now traded up to $1.40, and I think it is because people are starting to understand the leverage of projects like this to not just a future price for gold, but the current price, which is $2,734. When I run the model at that price, the NPV per share is $8.91 to $11.69, again compared to $1.30 where it was on October 31st. And that turns into $6.88 to $8.77 as adjusting for the fact that it is not ready to go into production tomorrow because the financing's not in place for making that happen. Now, if there's any of the KRO favorites that people should seriously consider buying now, it's Vista Gold Corp. Unless, of course, you do believe that how the future unfolds is going to cause gold to sink back below $2,000. But even at the $1,800 base case price that they did, and their feasibility study was completed in March, so it has already accounted for all the bad inflation from the past few years. The U.S. NPV per share works out to $421 to $873, again at 5% to 10%. And that, with the 75% rational speculation model adjustment, is a $316 to $655 target. Yet it's trading at 65 cents U.S., as if there's some fatal flaw that everybody knows about except me and the company itself. Well, Mount Todd, it's got the scale. It's the opposite from Westfold in that it would produce 6.4 million ounces at 400,000 ounces annually over a 16-year period. But what's holding the market back is that, well, this is so large, and it is a deposit below 1 gram per ton, and the major producers who are capable of financing the billion-dollar capex, they're not yet ready for acquiring a major open pit deposit that's less than 1 gram per ton. We just haven't really hit that inflection. Now, when you plug in the current gold price, 2,734, the NPV per share jumps to 1753 to 2772, or with that 75% adjustment, 1315 to 2079. And it's double that if you dare to dream that $4,000 gold without hideous inflation is plausible. So this really illustrates the extraordinary leverage. There's actually double leverage in the case of Vista Gold. The first leverage is that the market does not believe the current gold price is here to stay. It doesn't believe higher prices are coming. It just doesn't believe Vista Gold will ever be acquired and developed by anyone. And of course, the double leverage is that you can see how the stock will go up 10, 20 times when that inflection happens, where the market says, oh, $2,700 gold without extra inflation, this is here to stay. And that's why right now, if you are a gold bull, not just a fiat currency, the basement gold bull where, the costs will go to the moon along with the price gold, but one that believes there's a fundamental upwards repricing of gold as the world becomes much more different than imagined by the United States after the end of World War II, then buying a stock like Vista Gold, that is probably the smartest thing you can do with your speculative dollars right now.
Why do you think it's only a matter of time before the market starts doing the math about the current gold price and what it means for resource juniors with ounces in the ground?
Well, the North American investors, and these are the ones that I presume are the ones that would be buying, Canadian resource juniors and even many of these gold producers, they're in a state of denial about the gold uptrend and the fact that it keeps making a series of new highs. Now, in 2020, I created an index of companies, gold producers, producing at least 100,000 ounces of gold annually. Now, it's up 33% for the year. 56.6% from the start of 2020. Not exactly a wonderful performance. But ironically, gold at 2,734 as of October 31st, it's also up 33% this year. And you ask, okay, well, what's so ironic about that? Well, gold producers, they're supposed to outperform gold, especially when gold undertakes a real gold price, as it has now done. I mean, the real gold price, if you took gold in $400 in 1980 and inflation adjusted, the current gold price is 76% higher than the 1554 that it should be if it simply tracked inflation. But yet the producers, the market is no longer assigning this premium to this leverage to a higher gold price. Now, the way it works is because producers, they've already sunk their capex, and we know what their opex is. And if we're in a low inflation environment like the current one, opex is not going to change significantly. But if the revenue side of the equation, in other words, the price of gold, starts going up, that's all pure profit margin. And you're supposed to trade at a multiple to the profit margin. So the reason people buy gold producers is that when gold does undertake a real price rise, you're supposed to have a multiplier effect in the valuation of the gold producers. And that is not happening because the market just does not believe that the current gold price is here to stay or even headed higher in the long run. Because in order to get these high multiples, you need to the price of the commodity has to stay at that elevated level. And the experience in the past decades, you've seen palladium go to almost $3,000 and come back. We saw lithium carbonate go to $35 and come back from the sort of $3-5 range that it started from. There is this sense that none of these commodities, any gains that they register, are here to stay. But in the case of gold, the percentage that it's gained, it's not that significant at all. It's not like it's an exponential upwards increase and with an inevitable collapse coming. No, this is a readjustment in the way the world is pricing gold and the reasons it wants to own it. And I blame this on a kind of a cry wolf syndrome. I mean, from the late 70s on, for 25 years, we heard that gold's going to blast through $2,000 because of fiat currency debasement, all these woes of the world, and so on. And the pundits who pushed all that, they've been wrong. And the market seems to have sort of dropped into this mode of, fooled me once, shame on you. Fooled me twice, shame on you. They don't believe it anymore. They think, it's over 40 years since this whole gold story started, and now that this is happening, I just don't believe you. I think it's going to crap out back below $2,000, and the sort of the nothingness that you guys have delivered with your promises will continue to be the case, and that's I think a fundamental thing that's going to change in the next while, because what's really at stake is something different. The world order that the United States crafted after World War II, it is in danger of coming apart and dealing with an entirely new geopolitical global situation, possibly with the global economy fragmented into separate trading zones, hot conflicts perhaps involving nuclear exchanges. All of this is potentially on the horizon, regardless of the outcome of the U.S. election. So this is the reason gold is adjusting higher. But who wants to believe that all these bad things are actually going to happen? So in the old days, the fiat currency debasement's going to happen tomorrow, and put a big premium on gold producers and all that because it's going to happen tomorrow. Didn't happen tomorrow, but it's now happening almost a half century later when all this stuff started.
What does the resource junior bottom fishing landscape look like these days?
Well, it's interesting. I look at the GLD ETF, and all year, at one point it was down 2.1 million ounces in mid-February. Now it's actually up 400,000 ounces. But when you look at the traded value, the daily traded value, and the volume, and of course you have to look at the value now because with the GLD price so much higher, you need to see if the value is increasing. The value has actually been muted this year. It's lower than it was in the during that COVID period of 2020, and certainly lower than during the first quarter of 2022 when Russia invaded Ukraine. And the daily change in the GLD holdings, in the first part of the year it was all negative, losing ounces every day. But it's been since then, since gold developed the uptrend, there have been more up days than down days, but none of the up days are spectacular. And this is an indication, all this indicates that the North American audience is not really accepting that we are in a gold bull market. The ETF gains ounces when there is demand during the day, during the North American trading day, and they short the paper to the buyers and make purchases in the bullion market. And if the trend continues, they end up delivering the ounces to cover the shorts and get the GLD paper to cover the shorts. So you see the ounces grow over time. The ounces are growing very, very modestly. It is an indication that the North American audience does not really believe in the secular gold bull market. But the interesting thing is that I've noticed that on days when the GLD is down, my screen grows red in terms of like resource juniors and the producers, the gold producers. If GLD is down, they're all down. What's happening is that the price of gold is now being set overseas in Asia and in Europe through the London fix. And when the North American market opens, the gold price merely adapts to it, and then the traders out there, if it's down, they pound out gold producers. They just sell short, and it creates the downtrend, and then of course they cover it that same day or perhaps the next day. But one of the things I've noticed is when I track the daily traded value of TSX Venture resource listings, on days when my screen was all red, and in our Slack forum everybody's grumpy about this or that type of thing, I noticed that the TSX Venture resource listed traded value actually goes up. And this is a pattern that's been repeating itself. Now the markets are using what gold did last night to beat up or push up the price of gold producers. And in the case of Vista Gold Corp, which is listed on the NYSE Amex exchange, there the traders have easy access. It's liquid, so they can do this. But what I'm seeing is what looks very much like smart money accumulation. Smart money doesn't like to chase on the offer unless there is some clearly, company-specific development that they feel the market has not instantly appreciated. So yeah, then they'll buy at the offer. But they are buying on the bid. And in terms of financing activity, they are selectively funding companies. In September, the TSX Venture financing activity, although higher in total compared to this quarter or September to December of last year. If you look at financings that were $10 million or less, it's actually lower than it was during that part of last year when in terms of the equity markets, everything was tanking big time. So the money going into treasuries, it is not really there. But there is, you see the financings here and there, and they're selective, and they don't necessarily result in a bump in the stock price afterwards. I think the smart money is in there accumulating. It buys on the bad days. That's why the value surges. Normally, the bids should just disappear when suddenly the sellers are coming in and hitting the bids. So this, I think, is a sign that the groundwork for an inflection is being done. In terms of the landscape out there, the approach I've used for my bottom fish strategy is I go to my KRO search engine. I select companies that are trading, companies that are in the resource sector, and companies that are listed on the Canadian exchange. And that generates about 1,500 companies. And I just walk through this. For each company, that displays a long-term and a short-term chart. It shows a list of what the projects are, where they're located, what stage they are. It shows how much working capital the company has, what percent of the company insiders own, and who the key people are. And just visually looking at that, that allows me to make an instant thumbs down decision on companies that I know have zero chance of qualifying as a bottom fish. And obviously, companies with negative working capital, they are in serious trouble. Of the 1,138 TSX venture listings that are in the resource sector that I tracked, 44% have negative working capital. That's just under 500 companies that I just need to look at their working capital position, say, forget it, not wasting my time on these companies right now. Now, about 40% or 460 have $500,000 or more, and that's really the target that I'm looking for. About 15% are in that twilight zone of zero money to $500,000. Very hard to get anything done that will change the fundamental value of the companies. These are the ones that require a bit of more homework on my part to find out, is there a latent story there that if the climate changes, if we get this inflection, they will attract attention, they will have money pushed at them. But right now I'm looking for the easy pickings. Obviously, the ones from last year, or for this year, I mean, 2024, that was not a huge list, and many of them are qualifying again. It's obvious they still have money. The projects are still there. Those are the easy ones. But I'm also finding brand new companies that I really don't know anything about, and I see that it hits these basic bottom fish criteria. So I drill down deeper and say, oh, okay, this is interesting. So I've started to add brand new companies that my subscribers have never really heard of. Now, anybody can do this, but it takes time to plot through 1,500 companies, visually look at them. So most of my subscribers, they say, okay, John, you spend your day doing that, and we'll go to that part of your search engine in the special parameters box where you have a box that says companies confirmed as bottom fish for 2025 as of October 1st of this year. And then this gets updated every day, and they just go through that and check those out. And some of them are tentative confirmations. I still need to do some work to flesh out and explain why suddenly this company that nobody's ever heard of is a bottom fish. But this is what I'm currently engaged in that will occupy the rest of this year. I'm trying to prepare my subscribers for a possible big sell-off in the last couple of months of this year, but I'm pretty optimistic that heading into 2025, we will get that inflection. We will see gold price finally being taken seriously by North American investors. We'll see that first in the producers going higher. Then we'll see the Vista Golds and Westfalls start to go up and get priced for a takeover bid that's actually believed to potentially happen. And then we'll start seeing the interest in the exploration juniors. But the other thing to keep in mind is the changes that I see that are coming. The United States needs to become more reliant on production of raw materials, either domestically or in jurisdictions that are friendly. And the pool of jurisdictions that are friendly, or at least that the United States is friendly towards, it's shrinking ever smaller. And when it comes time to find new deposits, not in gold, but in all the other metals, that's where the resource juniors are going to, I think, really be recognized. And it will no longer be a case that this, when I survey this landscape, it really is like, walking through a valley of death, a wasteland of devastation. It really does look like we're still on track for the extinction of the Canadian resource junior ecosystem by the end of this decade. But I think there's an inflection coming where all of a sudden they will be the heroes, the solution to the problem of where do we find new deposits that aren't sticking out of the ground so that we don't have to rely on metals being shipped from Africa, from China, from Siberia, parts that are all part of the global East, and even from places in the global South where they are aligning themselves with China, the new rising superpower, while the United States does its absolute best to unmake the world order that it constructed after World War II.
John, thanks for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.